This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In this chapter, chapter 6, we're going to be looking at tax-adjusted trade losses for individuals. The rules are slightly different for limited companies, and you will find that chapter also has been recorded so that you can watch that. Be careful when you are doing an exam question that you know that either you're dealing with an individual or with a limited company when you start out, because the rules are slightly different. You will also have to remember the rules. These rules are very important, and they are quite often asked in multiple choice questions in section A. So just be aware of these rules, learn them, make sure you can differentiate between limited companies and individuals. We're going to do a lot of practice questions, so you'll see how it works. So sole traders are assessed now. This is the new rule. New Finance Act 23 rules. No basis periods. If you've learnt anything previously about basis periods, forget it. We're not doing those anymore. So if there is a trading loss, the trading profit assessment to be included in the computation is nil. Do not ignore a loss. Do not put the loss in and put brackets around it. You put either 0 or write in nil. It can never be negative. Never put a negative figure into a tax computation. Now, these are the rules for relief of that loss. So if you've made a loss in your accounts, so you've done your sales, cost of goods sold, gross profit, expenses, net profit, you've adjusted it for tax purposes, and it's now a loss, or it was a loss and now it's a bigger loss because you've adjusted it because it's the same pro forma. You are allowed to claim relief for that loss in your income tax computation, and these are the main reliefs for individuals. Number 1, carry forward against future profits from the same trade. Okay, it must be the same trade. Relief against total income in the current and or previous year. So that you'll see me do that. You have a choice between one or the other. I'm going to explain that more in detail. So following a claim against a current year, if there are any trading losses that remain, you may choose to extend the loss claim against chargeable gains in that tax year. There are some conditions that you need to fulfill in order to be able to do that, because you're crossing over from an income tax into a different tax, into capital gains tax. Now, there is a special opening year's loss relief which you can claim against total income in the preceding 3 years. So these are the 3 normal ones. Opening years is a special one for opening years when you first start to trade. And then there is one at the end when you cease to trade. Again, you can carry it back 3 years. That's first in, first out, and that's last in, first out. And we're going to do that in some more detail now. So let's have a look at the first one. This is what's known as the default position. In other words, if you claim nothing and you do nothing, and you don't write anything extra on your tax return, then the losses will automatically be carried forward to be treated against the first trade profits arising from the same trade only, not total profits, just from the same trade. And the loss must be set off in full against the next available profits if this option is chosen. As I say, it's what's known as the default position, and it happens automatically if you do nothing. Okay, and then you can carry it forward until profits arise. So we're going to have a look at example number 1 of Albert. So Albert had the following recent trade results as adjusted for tax. So in the year to December 2021, he made a loss of 5,000. In the year to December 2022, he made a profit, and in 23 he made a profit. Assume that Albert chose to carry forward the loss. Quite often in a question, obviously this is quite a simple question, quite often in an exam question, and it is tested in exams because it's a difficult topic, the question will hint as to how and when and what you should do. Now this is obvious because they've given you no information prior to 2021. So it's obvious that it's going to be carried forward. And again, they have assumed and they have told you that. So we are to calculate his assessable amounts for all the relevant tax years. So let's have a look at what that would look like on a pro forma. Pro forma, again, very important that you set it up correctly. Now we always put the years across the top. Years across the top. So these are just my notes so that you can see what we do. And then down this side we put the pro forma for income tax. And see how it works. Okay, so the years are 20, 21, 22, because that's the year that December 21 accounts are in. 20, 22, 23, 20, 23, 24. So those are our years across the top. Nice, neat, well presented. So we have trade income. If you remember, if we have a loss, we write in the words nil, and then we copy from the question the profits that we have made in that time. Now, loss relief, because it's carried forward, it's against the same trade, okay, not against total profits. So also at this point, you see, nice, neat, well presented, we need what's known as a loss memorandum or a loss memo, our working number 1. There are lots and lots of marks available for making sure you show exactly what you've done, because if you just do the numbers in there, that's correct, not a problem, but you'll only get probably half a mark for that and half a mark for that, because the examiner's after, do you know the rules and have you applied the rules? Now those rules are shown in the loss memorandum. So what we do is we outline the loss for the year ended 31st of December 21, and that loss was £5,000. So the exam, and that's important if you've got like 2 losses, you need to do them in chronological order, you need to separate them all out. It's important that you show this. So we are going to carry forward the loss, that's the rule, okay, and then we're going to give a date. Make sure you put the date in, and we're going to take out that 3,000, put it in there, finish these off. Always subtotal as you're going along. So this principle that I'm showing you now, years across the top, pro forma down the side, copy the question, set up the loss memorandum, write in the loss that you're dealing with, put in the rule, put in the date, deduct, subtotal. All of this principle applies to every single loss question you will ever do, regardless of how simple or how complicated it is. Then we are going to continue to carry it forward because that's what the rule says. And we're going to take that to the 31st of December 23 and use up the balance of our losses. So to carry forward, there's nothing left. We've used it in full. That 2,000 goes in there, giving us 8,000, which would then be added into the balance of our income tax computation. Same principle every time. Okay, so let's have a look at this section now. Loss relief against total income.